Good morning, everyone. There you go. All right, hey, welcome to another Wealth Coffee Chat, folks. A few of you up early and at it, which is excellent. Sam, good morning. Kevin, all the way from Florida. Good to see you, mate. Stewie. Good to see you, Stewie. Fiona, mate, how are you? Good to see you, Fee. And Bradley, morning. I hope you're all awesome and well, folks, wherever you are in this wonderful world right now. I'm down in Sydney, actually. Andrew, morning to you. I'm going to hang out today with a few business owners and talk about property investing. I don't know. Can you see out there? I'm in, where am I? I'm at the beach in Sydney. Coogee, that's where I am. Anyway, good to see all of you here this morning. G'day, Jeff. And Alex is in the house. Morning. Luke, there you are. Yep, some interesting things happening in the budget. Fenton is going to do a little briefing for us all. He and I are going to get together and talk about the budget. Not that interesting, to be honest, but there's some stuff there we need to know about, so we'll get into that as we go. But yesterday we talked about a record that the Aussies have broken. Aussies, good record breakers we are. Largest amount of personal income tax paid ever in Australia's history by Australian workers. Well done, Aussies. Gave the government a $4 billion surplus, that they didn't know about. So anyway, there you go. But I thought we'd sort of continue a little bit of that this morning and talk about those things. We didn't get a chance to talk about some of the other taxes that we can manage and minimise on our way through this journey of property investing. So stick around. We're going to have a bit of a chat about those. Yeah, there might be some waves out there. Jeff, there might be some waves. Anyway, there you go. So if you didn't already know, most of you do, but spread the word. Jason Witten's my name. There you go. And let us know where you're dialing in from. We do this each morning around about 10 past 8. And if you're up for it, we hang out and we talk about sorting out the fear and ignorance, which is pretty synonymous with the media. And just getting to the bottom of it, folks, working out this stuff that we need to know, what's important, what's not important, when to do something about it, if ever. It's certainly important to discuss and understand. So that's what we do here on Wealth Coffee Chat. We're into real estate. We talk about real estate, residential real estate, particularly, is our jam. So welcome along. If you're new, let us know. If you're returning, great to have you back, folks. Dialing in from Coogee. Yeah. Coogee. Is it Coogee? Coogee? I don't know. How do you say it, Fiona? There you go. Anyway, let's hang out. Let's do this. I've got a riddle for you, folks. I've got a riddle. Riddle me this. Riddle me this. Tell me, team. Folks, what are those numbers? 2.4 million, 3.2 million, and 4.1 million. What do you think they are, folks? Tell me in the chat just there now. What do you think those numbers represent? When it comes to, well, I'll give you a little hint. We're talking about taxes. That's what we're talking about. So $2.4 million, 2.4, 3.2, and 4.1. Future house prices in Sydney. You might be right. Listen, Luke, I think they're already there. Maybe, well, listen, Sydney's off and running again. But let's have a look. What do these numbers represent? They represent something pretty interesting. They represent the taxes. If you started, let's say, at age 25, 25, folks, age 25, and this is just your income taxes. This is just your income taxes. This is not about stamp duty and GST and, you know, fuel excise and, you know, you name it, the other hundreds of taxes that we're, and duties and other things that we pay. If you started working at 25 and your income was, you know, this consistently, and obviously this is not linear, you don't start at age 25 and go like that, but, you know, average wages over a working lifetime to the age of 65, check that out. 120 grand, you're going to pay $2.4 million in taxes. Thank you very much. $2.4 million in taxes. So tell me, I don't know, do you get that? Do you get the value of that at the back end? Who knows? I don't know. I'm not against paying taxes, folks. I'm not. However, what I like the idea of is managing those and, you know, making sure we're getting value for them. That's what rubs me the wrong way, folks. You know, I'm happy to pay my fair share of tax, but when it comes to, they brought in the GST and they were meant to take away stamp duty, and what did they do? Kept stamp duty as well. Then they put the land tax up, not only GST, stamp duty, and land tax on property. Anyway, I think that's wrong. Anyway, there you go. And you said it right, Sam. Wow. But let's just check this out, though. Let's check this out. If you were to, you know, improve your station in life, you were to study, you were to work hard, you were to, you know, get a pay rise. Oh, God forbid you became an entrepreneur and become a business owner. Those numbers are only more and bigger. You know, you improve your work ethic, you improve your skills. So for you, it's essential that you need to understand and use the rules we can get access to as investors to manage and minimize our taxes. That's all I'm saying. Folks. All right. I think it's important. I think you should know about it. I think you should be able to manage that, because record taxes, record PAYG. Thanks very much, Australia. We are getting ourselves out of the debt. You know, not the politicians. I can tell you that. Okay. Anyway, there you go. Imagine that. You know, you're doing well. You're earning 180 grand a year. $4.1 million. Crazy times. All right. And if you have a little look based on your salary and, you know, improving yourself, you know, crack 100, you want to crack 200, you want to crack 300. Holy dooly, right? A lot of taxes, a lot of dough. What can we do about it? We talked about this the other day, and there you go. Record personal income tax. Well done. Well done. Go Aussies. Go Aussies, go. There you go. All right. Morning, Alison. And we've got Google this guy. All right. There you go. Morning. Good to see you. That is true, Luke. That is true. So for my money, for your money, I think we need to be smart about this, don't we, folks? We need to be smart about it. And we talked about it yesterday. We talked about the 4 taxes as property investors that we are exposed to. We talked about those taxes. Oh, hang on. Let's play that again. Something went awry. Give me a moment. We talked about the 4 taxes that we're exposed to, and you know, there we go. You know, that is the PAYG. Okay. Now you do the PAYG variation. Okay, variation. You use real estate. You use new property. And you get depreciation, and then you get your tax back weekly, fortnightly, or monthly. Okay, whatever your pay cycle is. Okay, so how do we manage that as investors? Well, that's how you do it, right? We use our equity. Sorry, I haven't shared that screen yet. Let me do here. Here we go. PAYG. You've got your PAYG variation, which means if you've got some tax deductions, you go to your pay clerk, you talk to your accountant. If your accountant doesn't do this, folks, if you're not doing it right now, all you're doing is giving the government free money for a year. Tell me in the chat. If you're sitting there right now as a property investor and you can claim your tax back weekly and you're not, you should. But tell me, if you lend your money that you can legally get back each week, if you're lending it to the government for a whole year, how much interest are they paying you? Tell me in the chat, folks. You didn't claim your tax back weekly, which could be like $100 or a month. You've given the government $100 a week for a whole year, $5,000 for the year. You've let them use your money. How much interest did they pay you? Tell me. Anyone got the interest rate that they pay you for leaving your money in their account for the year, folks? Just let me know. Anybody, let me know. Brad, yes. So they pay you 0%, folks. They pay you 0%. And what happens if you happen to be late on your tax return or, so they pay you 0% for the privilege of having your money. And if you have a bit of a challenge or a problem or whatever, if you're a little bit late on your payment or you've got a challenge with getting your tax returns done, whatever, then they'll fine you. You kidding me? Right, here, listen up. Telling you right now, Uncle Jason is telling you today, you're causing your own problems if you're not claiming your tax back weekly, fortnightly, or monthly. Don't argue with me. And if your accountant won't do it, you come and get my accountants to do it because your accountant's a muppet. Anyway, folks, you get wealthy not by one big deal. You get wealthy by saving $1 at a time, making $1 at a time. Tell me, if you got $5,000 back, $100 a week, what would you do with it? Where do you put it? And you guys know this. That money goes back. It goes into your offset account. It offsets your mortgage, saves you interest, and makes you money. Not only that, it's in your account. It's not in anyone else's. And then you've got access to some extra cash flow, some extra cash if you need it. Folks, come on. Get on the bandwagon. All right. Most accountants that I know are lazy and they won't do it for you. All right. And if they won't do it for you, and if they're going to charge you more, sack them. Come and get my guys to do it. All right. Get rid of them. You don't have time for lazy people when you're trying to create wealth. Those who aren't there to help you create wealth, they're there to make their own life easy, not yours. End of story. Right. PAYG. The next one, like we said yesterday, is capital gains tax. How can we minimize our capital gains tax? Chuck it in the chat for me. What's the number one asset we can own capital gains tax free? You guys know this. Your principal place of residence, your home, the house you live in, your principal place of residence is capital gains tax free, folks. All of you should have one as part of your wealth strategy. Now, there's some pretty cool rules on this. We have a strategy, a tax-free strategy, capital gains tax-free strategy. Yep, totally. Dead right, Sam. If you don't want to pay capital gains tax, don't sell your investments. You're dead right. So I'm a big fan of you buying investments that you like the idea of owning forever. Buying and selling is very, very inefficient, terribly, terribly wasteful. Just buy one and keep it for 25 years. Don't buy four because you bought a rubbish one and then it wasn't any good and you tried to buy another one and then you tried to buy another one. Only people who win in buying and selling are the government and the real estate agents. Okay, I can tell you that. Okay, I've seen it thousands of times, folks. Matter of fact, over 10,000 times in the world of property investing. Right, don't sell. Dead right, Sam. You're on it, all over it like a Labrador on a kid's dropped ice cream on the paved walk. I don't know. I was just trying to make one up on the fly. Not a very good one. Your principal place of residence, capital gains tax free. You should have a principal place of residence upgrade strategy in your radar or on your radar. Capital gains tax. There are some other ways to minimize capital gains tax as you go. Ways like owning a property for more than 12 months. If you do plan to sell it, if you own it in your personal name or a trust, well, you know, if you own it for more than 12 months, you then qualify for the 50% deduction or reduction in the calculation, etc., etc. Okay, but at the end of the day, don't sell is the point. Okay, the point is you're buying these to own. Leave them alone, for crying out loud, you lot. Anyway, it's the first 3 to 7 years, which is the hard years. I get it. I've done it too. I make a bit of fun of it, but it's not that fun sometimes. I get it. And right now, interest rates are up. It's like shit. You know, it's expensive. You know, it's stinging. I get it, but you got to hunker down. You know, a couple of years ago, it was all easy street. If you weren't putting money aside then you know, now you've got to put money aside now. PAYG, capital gains tax, and the other ones are stamp duty. These are kind of on the way in. All right, stamp duty and land tax. Land tax. All right. How can we minimize stamp duty, folks? Well, that one's a little more challenging, but there are places and spaces where you can do that, right? Stamp duty, you can buy land and then build, okay? You only pay duty on the land portion, not the build portion, okay? So, you know, technically at the moment, that's kind of half-half. You know, you build a house for maybe 300 to 400, you buy a piece of land for 300 to 400, you know, you're only paying stamp duty on the land portion, okay? The land portion. Great way to do it. Sometimes in places like when there's stimulation going around, Victoria, a couple of years ago was doing, you know, half stamp duty for as an incentive for investors to come to town, come to Melbourne, come to Victoria and invest. Keep an eye on those things as well. Stamp duty is one which is a little more difficult to reduce, but there are opportunities. And land tax, folks. Last one, land tax. Most of you may not know this, but land tax is a state-based tax. It's charged by each state, and each entity, you know, you, your partner, a company, a trust, all different structures of ownership have all different thresholds, okay? So what you need to make sure you manage and calculate and understand, we've got a land tax calculator. You can download it from our Facebook groups. So go join those Facebook groups if you're not in there already. We've got a land tax calculator. We've got a passive income calculator. You've got a property analyzer calculator as well. So go get those calculators. But land tax, folks, land tax, you can keep it at low or no land tax in a couple of ways. You can buy in different states. So in different states, because it's state-based, we always say at least 3 or more states is good because you want to diversify your portfolio anyway, but it also reduces your exposure to taxes. And make sure that you understand what to buy in those places. And it's called land tax, folks, isn't it? It's called land tax. So often, a lot of people don't understand or don't realize if you don't own a lot of land, then your land tax value will be less. What do I mean by that? This is where sometimes things like apartments can be super handy when it comes to the cost of land tax, because the land value of an apartment is lower. Doesn't mean the value of an apartment is less, but the land content is less. So you pay less land tax. And in the future, You want to get income from your rents, and land tax is a cost. If you're getting $1,000 a week from your apartment or $1,000 a week from your house, the apartment's got no land tax, but the house has now got $100 a week land tax. There you go. 10% of your income goes in land tax. Anyway, there you go. A little bit of conversation around the world of managing your taxes, because, folks, it's not about how much you make, it's about how much you get to keep. I see so many people make a gain. You know, we've got some clients. We've got property settling now. Alison, did you get your valuation back on your property? Because I've seen the valuations coming in very nicely up there in Brisbane. So all good. But I've seen people make money and then they sell their property because they've made a gain. They pay all these taxes and they're like, oh, what was that about, right? Anyway, Wealth Coffee Chat done and dusted, folks. Over and out for today. Thanks for joining me. Great to see all of you online. Let me know in the chat. I think yesterday somebody said they would love us to cover the budget. Stay tuned. Andy and I will be going through the budget, letting you guys know if there's anything really to be worried about, and we'll do a full debrief on that one. Chris, yes, I did get underground the other day. Didn't go too far down, about 100 meters down, about 21 levels down. Went down to the drilling rig, which was quite interesting. So yeah, fascinating stuff. To be honest, I love it. The mining industry is absolutely booming, going off its chops in WA. So interesting times in that marketplace as well. There you go. All right. Well, listen, yeah, budget talk certainly needs wine. Fenton and I are lining that one up. There you go. Well, there you go, Chris. Interesting industry, that is for sure. Fair bit of wealth and money floating around to those industries too. So yeah, well done. All right, folks, that's it. I'm done. Probably just rabbiting on now. So you guys be awesome, be well. Thanks for joining. Let me know in the chat if you want anything, want me to cover anything in our chats each day. Always happy to see what I can dig up and talk about and pontificate on as we go. Yeah, Alison, that's probably a great place for the miners to look for disciplined people for mining. Anyway, there you go. All right, folks, I'm just rabbiting on now. Anyway, thanks, Andrew. Thanks, team. Great to see everyone here. Join me tomorrow. We'll have another chat if you're up for it. Cheers, folks. Remember, this thing's a marathon, not a sprint. Takes time. Bye, well done, South. See you, folks. Bye now.